So going back to answering the fundamental question that we're here to answer, how do you thrive in a time like this?
Let's look at other opportunities. So maybe not everybody likes crypto. Another thing that is patently obvious is technology is not going away. But if the thesis is that technology is going to continue to have this ridiculous adoption, whether it's AI, EV, whether it's robotics, whether it's genetic sciences, all of these things that are around us, space travel, well then if it's being sold in a fire sale because everybody's panicking, well, surely that makes sense because technology has outperformed the market for the last 40 years. So you always want to be buying technology. So if you're thinking of your 401k, you're in your 30s, you look at your 401k and you've still got your income, because that's the most important thing of everything. You've got your income. You should be going, okay, I should be buying technology stocks and I should be buying crypto because these are long-term megatrends.
On Friday, the U.S. Labor Department announced that the Consumer Price Index increased 8.6% in May from the same month a year ago, marking the highest reading since December 1981. The market reaction was instantaneous. In just around 24 hours, the crypto market had shed around $9 billion, fallen to $1.10 trillion, its lowest since January 2021. The carnage is similar to that of the stock market. As of press time, the S&P index is once again below $4,000. This is the third time it is trading below $4,000 in 2022. On May 11, the index fell to $3,935. It regained some of the losses shortly afterwards, but dipped further just a week later. By May 19, it had fallen to a record low of $3,900. We are back to the same range now. At $3,900.86, the index has fallen by 5.66% in 5 days. With the continued bloodbath in the financial markets, Real Vision CEO and macro investor Raoul Pal attempts to answer the question on everyone's lips. How do you successfully trade in volatile markets? In a recent interview, Pal discusses, among other issues, how the world's biggest sovereign wealth funds and family offices are allocating their assets despite the market volatility and economic uncertainty. Let's get right into Raoul Pal's interview. But before we do, please take a little time to hit the like button and don't forget to drop your thoughts about Pal's interview in the comment section below. Here's Raoul Pal.
Is this like another time? Is there something that we can learn from historical trends that we could be applying to our investment thesis now?
So the investment thesis, I don't believe so necessarily. There's a lot of macro similarities with the past episodes, and everybody makes it very dramatic. There tends to be a lot of doom porn, and I've been a proponent of that as well. You know, everything looks like the 1929 crash. Everything looks like we're going to go to World War II. Everything looks like, it's 2001 all over again. Yes, those things happen, but things go on. And if you'd bought tech stocks after 2001 crash, you'd be very, very wealthy indeed. If you think of Jeff Bezos, he launched Amazon, bright-eyed and bushy-tailed, has his IPO. It explodes in price. Everyone's like, oh, amazing, an online bookseller. It then falls 96%, right? So this is exactly what I went through in crypto, exactly the same. And then what happened is, well, unlike most of his investors, he held on and it went up a lot again, still didn't make up the high. It fell another 80%. It went up again. It then fell 60%. And then before you know it, this online bookseller was suddenly worth more than all the bookselling companies in the world added together. And it was still trading at a price earnings ratio of like 800. Everyone's like, this is crazy. This is a bubble. But what we didn't realize is he was building a network, this network for e-commerce, and then the computing power that drives it, And so over time, Amazon just did that. And these are the things you need to think about in this is, where are we in the volatility and is this going to survive? Those are the two questions. And if the long-term trend is there, then you should be buying into all of this.
What are the smartest people buying right now? Anything? Are they sitting in cash? Are they moving on something? Are people waiting for a signal?
There's a lot of cash. So I have my Global Macro Investor Roundtable, which is a bunch of my subscribers from my kind of very high-end institutional research service. A bunch of the world's most famous hedge funds, family offices, asset management firms. And we all have this little enclave here in the Cayman Islands with a lot of wine and a lot of discussion and trade ideas and stuff like that. And generally people are a lot in cash. The real estate developer guys, the kind of wealthy guys who were in real estate as their primary thing, a lot of them had sold quite a lot. Then the hedge fund guys were very concerned about recession, but were looking, and so they were buying let's call it cash, bonds, cash, anything to kind of just not be involved in risky assets like stocks and stuff. But they were looking for the opportunity for the other side, which is what is that opportunity? And that opportunity was technology, crypto, and commodities. Commodities have gone up a lot recently, but we've got this, it's this greening thing that's going on, right? We're going to green the world. We have the political willpower to do it, and it's going to happen faster than the market can take. And that means we underinvest in mining stuff and we overinvest in battery technology, wind farms, solar farms, right? And the idea is eventually you accelerate this so much that it becomes the adopted technology and electricity becomes cheaper from doing it. The issue is there's not enough copper for the electricity we need to generate. So we're about to go into this enormous copper shortage. You don't notice it now because the economy's weakening, and so less people demanding copper. But once we come through the other side of this, you're going to have this huge demand for copper, and it's a problem. But it's part of that green energy transition. Green energy transition also is going to require a lot of other stuff to build these wind farms, these solar farms, the hydrogen power, and whether we go to atomic energy or whatever it is. It's a whole change in how the world works. It's very similar to the 1950s when we kind of rebuilt America, the factories and all of that kind of stuff. So that moment in time means that these guys wanted both commodities and technology, because they know this one's probably kind of a good 5 or 10 year cycle, and the technology cycle is limitless right now. So that's, I guess, where most people were thinking. But everyone was very nervous over this next 3-month period about what happens to the economy and what could happen to market.
According to Powell, we have the biggest family offices and sovereign wealth funds keeping a lot of cash handy for future opportunities. Going by his explanation, these big money investors have been on the sidelines for a while now and might soon be ready to put some money into the market now that prices are falling rapidly. These big money investors showed a lot of interest in the crypto markets earlier in the year. Do you think they are waiting for the bottom to allocate some of the cash they have lying around into the space? When they do come aboard, how will their involvement impact the crypto economy? Let's know what you think in the comment section below. Back to Raoul Pal's interview.
What are the signs that they will look for to go in on something?
So we talked about income plus opportunity. So they've got the cash. So, one of the world's best technology investors, Coatue, I think they're 70% cash.
Whoa.
Which is extraordinary, because these guys are, they're aggressive technology investors, 70% cash. There's a whole bunch of people who are. So what they're saying is the future opportunity is going to be big and it's going to be cheaper than it is today. Now, will they time it properly, etc.? Doesn't really matter, but here's what the smartest people are saying is the future opportunity is better than the present opportunity. So
that's a little scary though, because that means prices are going to go down further.
Well, we don't know when they had that bet. They might have done that 4 months ago, in which case it's been a very good bet and they'll be looking to deploy. And if I read their investor letter, they say they're now starting to look to deploy stuff into interesting opportunities where things are really cheap, which is the thing I said before. When the market throws out the baby with the bathwater, that's when you start finding the things you really like. In crypto world, things like Solana, great project, down 85%. There's a whole bunch of these big layer ones with network adoption effects already. These are not super speculative assets. They're obviously speculative, risky, but not super risky. They're all down 80, 85, 87%. Okay, that becomes interesting.
Technology and commodities are Raoul Pal's highest conviction asset categories for this volatile market environment. What do you think? Is he spot on or far off the mark? Let us know what you think in the comment section below, and don't forget to hit the like button and subscribe to the channel. Thanks for watching.